Hello, I'm Mushtaq Kapasi, Chief Representative for Asia Pacific of ICMA, and I'm delighted to be here today with Ashish Malhotra, Head of Capital Markets for Asia for Standard Chartered, and ICMA's Committee Chair for the Asia Pacific Regional Committee. Ashish, good day, and many thanks for joining us. So first, in the Asia Pacific debt capital markets, what have you seen as the major themes over the last year?
So Mushtaq, starting with last year, of course, come March, April, at the onset of the pandemic, we did see almost sort of stoppage of all issuance activity. I would say more so in Asia than you saw in the West. However, thanks to the Fed rate cuts, all the sort of monetary policy activity, bond repurchase programs, fiscal initiatives, etc., we did see a sharp recovery in the month of May, with kind of spreads contracted again, interest rates were low, so it brought out issuers actually in a very strong manner. So for the rest of 2020, we saw very healthy issuance volumes to the extent that 2020 was a record year in terms of Asian issuance volume of about 350 billion. So that was about 2% higher than 2019. And what was very interesting is that throughout the funds flow picture was kind of quite supportive. Now, when you look at 350 billion for 2020, it's not as eye-catching as the US, but for Asia, that is a very healthy number. Now, we of course started 2021 with kind of what I would say from a fixed income perspective, very good market conditions with benign rate environment, extremely tight spreads. So we had a very strong first quarter. We had 100 billion of issuance in Asia, and I'm talking about the G3 cross-border bond market, and which was about 25% higher than what it had been even last year. And then in the kind of second quarter, barring a period where the questions were being asked about what is the interest rate outlook, will inflation be a factor, would Fed start with tapering? But generally, I would say second quarter has also been very supportive. We've seen 65 billion and counting in the second quarter this year, and overall the run rate is about 20% higher than what it was last year. Now, when you look at where the supply has come from, of course, geographically, this year particularly, you've seen Korea very strong, supply. South Asia generally very strong supply. Of course, in South Asia, the last few months it's been a bit different because of the kind of second wave in India. And of course, China has been rock solid, and the supply patterns have been higher than last year. What has been interesting within that is that sovereigns and SOEs have been very active. So, to give you some example, Malaysia chose to come back to the bond market after around 5 years this year. And then we've seen new sovereigns as well. Maldives is one example. And then when I think kind of away from sovereigns into the corporates, I think two sectors that stand out for me are TMT. A fair bit of issuance and some very large, chunky deals from kind of tech sector there, and of course, oil and gas issuers have done some large deals as well. So, overall, 2021 so far year to date has been pretty impressive as well.
So one quick follow-up to that is, how have you seen actual deal operations, the way deals are being done, the practices change in Asia over the pandemic, and has this been similar to what you've seen globally?
Yeah, but generally speaking, yes. And but one thing we have to keep in mind is when we think about deal practices, we are essentially talking about how has work from home worked. And I would say that if you look at the last call of 6 to 12 months, the work from home has varied from time to time, and it has also varied from country to country. So to give you an example, China is pretty much back to BAU. There are client meetings happening in China. There is domestic travel happening in China. People are going back into offices, etc.
Conferences.
And when I look at Hong Kong, when I look at Hong Kong and Singapore also, there have been more instances of people coming back into office. Some of that have been team A, team B. But in Hong Kong, as you know, that client meeting activity, lunches, etc., have happened. But when I look at away from kind of Singapore into rest of South and Southeast Asia, it has been largely work from home. But the good thing is, it has worked very smoothly. I talked about how issuance volumes are running at 20% plus versus last year. So, So that is kind of good evidence that despite working from home and kind of working from home changing from time to time, if there's like a second wave or something, deal execution activity has gone on kind of quite smoothly. In fact, if I can say, we have seen a lot of first-time issuers in the market. We have seen a lot of issuers that are not regular issuers, but have chosen on, due to low rates and interesting spreads to come back into the market. And in normal days, those issuers would have been like done a week and a bit of a roadshow involving travel from one part of the world to another, and then priced a deal. The same issuers have actually been able to price deals with, call it 1 or 2 days of virtual marketing. So in a way, it has kind of compressed the market risk period, if you will. And another example, again, closer to home for you, is last year when there was a Typhoon 8. Normally in Typhoon 8, activity stopped.
Everyone went to work at
but
home.
there were deals being priced in.
Right?
So everyone was working from home, so people were still pricing deals and doing deals that day. So it's been interesting. But of course, personal lives and in terms of mobility, etc., they have had an impact. And I'm sure all the market participants, etc., are looking at various aspects of that and determining that as we kind of reopen from here, what would workplace and execution activity look like.
But it's a very interesting point you make about the ways that deals can be done in some ways more efficiently, especially debut issuers, and actually affecting and decreasing market risk. Very interesting point. Okay, one more question for you. So just taking a broader view, in your capacity, you're wearing two hats here, both as ICMA regional chair and head of a regional business. What do you see as the main ways that ICMA can improve practices and develop markets in the region over the next year? What should our priorities be?
First and foremost is the regulatory focus on institutional primary debt market. Hong Kong, for example, but elsewhere as well. So the work that ICMA is doing, which in the short term, of course, has to is catered towards making sure that any reform, any changes, are effective. But at the same time, in the long term, kind of making sure that we are promoting standard documentation, market practices that not only comply with regulation, but lead to really better deal execution and activity, and as well as a marketplace that is healthier and happier. So that's one. Second is again sustainability, but that's a space where ICMA has been a vanguard of all the guidance, etc., in terms of sustainable finance. Now, what has changed is that increasingly, regulators are having a say, and they are coming out with their view in different aspects of sustainable finance. Now, be it
right.
Taxonomy, be it disclosure or a product level regulation, and this space is kind of evolving very fast. So, ICMA's role in making sure that the market participants and its members, etc., kind of navigate through this complexity, and when you put into it also with the sort of net zero commitments of various economies in Asia and what that means for bond market. So ICMA has an important role in terms of so that all market participants are able to kind of do businesses, and in the end, kind of trying to promote international standard market practices in that space. So that's the second area that comes to mind. And the third one, and this is something again you and I have spoken about, is fintech. Now, of course, there are fintechs all over the world, but some of the sort of interesting innovations, if you will, with respect to the fixed income business are there are fintechs in Asia who are working in that space now. Whether that is a pilot digital bond scheme, or it is a primary market platform, or it is a platform that allows for greater retail participation into the bond business, or is applying kind of DLT technology into the bond settlement space. A lot of that work is happening in Asia. Now, when you combine that with a recent development where even in the space of sustainability, some fintechs are looking at that, and the two areas are converging. And a very good example of that is the Climate Impact X that was recently in the news. I think ICMA has an important role, to make sure that we are monitoring and staying on top of all of these developments, and eventually kind of getting our head around and helping the industry get their head around as to what it means for market practices and the DCM and the capital markets business in the future.
Okay. Well, that's all the time we have. But Ashish, thank you so much for sharing your perspectives with us. It's always a pleasure to speak with you. And I look forward to continuing to work with you.
Likewise. Thank you very much, Mushtaq, and have a great evening.
You too. Take care. Thank you.